Hello, welcome to the Economic Circle. This is a continuing lesson on the origins of money, and in this case we're going to focus on the emergence of paper currency and state control. So, is this real money? Well, yes and no. It means what we call currency, that which is current in the market. But real is what's underneath it, is what the market determines as the ultimate form of money, which usually, historically, and still is gold and silver. Now, why paper? We've already seen in the other lessons that the creation of and use of money substitutes emerged in the market economies to facilitate trade. That is, remember that money was never invented. Such substitutes could be token metallic coins that substituted for high-value coins, because the traders would prefer to keep them in their safe deposits at the bank rather than let the high-value gold coins or silver coins suffer clipping and sweating by unscrupulous traders. Sweating, remember that. Drop a bunch of gold coins or silver coins into a bag, shake them vigorously, and you speed up the wearing down process and take the little bits of dust for yourself, and it adds up to a whole coin after a while. Okay, but one of the most popular forms of money substitute was paper. Well, that's cheap for the bank to issue, which helps keep transaction costs down. And remember, that's what one of the biggest principles of monetary economics is all about. Traders like to keep their exchange costs down. And we come back to that when we look at modern monetary systems and also international currencies and other forms of trade. Really, traders are just interested in exchanging production for production, production for services, and vice versa. Right? They're not interested in exchanging for money per se. Money is just a medium for further production. Economic wealth is based on production, not money. Now, the first paper money was developed in China around about 618, 907 AD. It's quite popular, but it was banned after the inflation that it unleashed in the 1400s. The Chinese government, the emperor, said, no more paper money, not good. Right? The West could learn from this, but unfortunately China's gone back to paper money and is suffering, interestingly, inflation again. Benefits of paper. Well, it's cheap to produce for the mint or the deposit bank, whoever's producing the paper, whose services may be housed in the same place, maybe the same building, right? It's not subject to clipping or sweating, and it can circulate for a long time in the marketplace before a trader says, oh, I'll go and redeem that for some gold coins or silver at the bank. On the other hand, disadvantages is that it's relatively easy to counterfeit. Okay, it's getting harder with modern technologies. It can be torn and lost in the wash. Again, modern paper money is actually a lot of cotton in it, so it does stand a wash cycle. And it has a limited lifespan compared to metallic tokens, years. And it's cheap. Why does it say cheat there? This PowerPoint presentation, no, this is a keynote presentation, is often changing my words after I've moved on. Anyway, cheap to produce. Cheap to produce. This is simultaneously an advantage and a disadvantage. Paper notes can be produced relatively easy compared to digging up gold and silver out of the ground. This, for us economists and for historians and political scientists, is an incredibly important distinction. The fact that it is costly for the entrepreneurs to quarry for money, gold, silver, platinum even, means that there is a market-induced break on the market to expand the money supply of hardcore money. It's difficult to expand the money supply when it's actually a physical metal that has to be dug out of the ground. This is not true of paper. It grows on trees. Now, it's springtime in England while I'm recording this, and the grass is growing like anything. The trees are growing. Paper grows on trees, and the trees grow. Duh! This could be a problem. It's not as valuable. It's more easily accessible, easily produced, right? Now, the advent of paper substitutes played into the hands of the bankers, those bankers who sought to defraud clients in the market. Shock, horror, they didn't, did they? Yeah, afraid so. Paper money inflation. Now, imagine that a bank has £1 million in deposits, real hardcore cash, and realises that not all its clients come to claim their deposits at the same time. Assume that the bank also has 1 million notes available for circulation. In other words, alongside its gold and silver reserves worth 1 million, it's actually printed a bunch of 1 million notes. These notes represent the claims of all the depositors. Now, naturally, all of them might not be circulated in the market economy at the same time, but they are there to be released when traders require them for exchange purposes. You know, when you go to cash in the wall machines and you pull out some notes, right? So in the bank vaults, there's 1 million of gold or silver and 1 million of paper notes ready for traders to take out. Now, yeah, absolutely, banks wouldn't normally print the exact quantity of substitutes that they hold in reserves. They would work out a proportion of the funds required for daily, weekly, monthly transactions and print a sufficiency. Now, if the traders wished to withdraw more substitutes than were available at any given time, the bank would have to pay out in hard currency instead. Not a problem. So I'm really sorry, sir. We've run out of £10 notes, but we do have some silver coins. We better have those. Now, markets, though, are pretty adept at handling a sudden increase in demand for products, especially today when printers can work 24/7. And of course, most transactions are electronic anyway. There it goes again, electron. Well, electricity is based on electrons, charges. Now, what we're focusing on is how, in the early bank system, the deposit bankers released more, and there's the key word, money substitutes than they held on reserves. Now, I've repeated this several times through the other lessons because we need to comprehend the critical, vital, absolutely real importance of issuing claims beyond what a business possesses. Because you can't do it, right? But banks do, and they get away with it for some time, as we'll see. So, now let's say the bank issues some substitutes to the value of 1.5 million. It's got £500,000 more on paper than it possesses really in its accounts. It lends these out as loans or overdraft facilities to students, yep, you lot, and businesses, yep, my lot, and charges a fee for the privilege in hardcore cash. This is like a car dealer selling 1,000 cars to buyers unseen over the internet or through advertisements, and it's only got 800 behind it, right? This in itself is a violation of reality. I cannot claim to have 1.5 million and only have 1 million in the bank, as any audit would show. Oh, perhaps you say, a bank could get away with it by not being audited. A bit like the Federal Reserve in the United States. When was the last time that was audited? Don't know. It's possible, but ultimately there are more notes circulating, and the bank is earning more profits than its competitors. Sooner or later, people will begin to inquire. That Melton Bank turned around. How the heck was it earning 20% profits when there's a smaller bank than us? I don't understand it. So rumours may begin that the bank cannot cover all of its obligations. Dun, dun, dun. Traders will start demanding redemption of notes in hardcore cash, and as the bank struggles to make payments, a run may occur. No, good heavens, a bank run in today's society? Impossible, implausible. Well, Northern Rock in the UK, I think it was 2008, that one. Cyprus, about 2011, somewhere around there. Bank run. China, not sure what date that was, but they do happen. Wow. And they only happen because the banks say they have more money on their account than they actually do. Cheeky things. Now, how this is found out could take time. That depends on all those human variables in the market. After all, if a body is found and there's a murder investigation, it could take a while before the criminal's caught, right? But one thing is for sure. As the money supply is increased by the spurious printing of more money substitutes, prices in the markets will tend to rise. Get this, economists! You print more money, prices go up, right? This depends, though, on the number of note issuers. If there is only one major issuer, and most market transactions are denominated in, let's say, the Melton Bank's notes, then certainly local prices will start to climb relative to cities and towns further afield. And if the Melton Bank is one amongst many, traders might just begin to discount its notes against others to reflect the perceived heightened risk of holding their notes. Now, the Melton Bank may get sniffy about this. They seem to be discounting our notes on the market, you know. But it's up to them to maintain trust in the marketplace. Now, can the astute among you see how this relates to modern currency markets? Dun dun dun! A central bank prints money and the currency falls. Then the government gets sniffy and moans about speculators. What about the difference between a single bank doing this and a systematic inflation by the banks? When one bank issues false claims and charges a fee in hardcore cash for the privilege, its fraud will not last long before it's uncovered. What is long to an economist? It all depends. But when all the banks in the country do it, the fraud can be perpetuated for a long period. How long? How long is the short term, the long term? We're not accountants. We don't say the short term is 1 year. The long term is after 1 year. No. We're economists. The short term could be a day. It could be 20 years. It depends on when other variables are allowed to change. So again, it's too many human variables to predict when people start sniffing around and going, oi, I don't think the Melton Bank has enough gold and silver in for all these notes that they keep pushing out, you know. Today, people call this, what I've been talking about, the banking system. This is the banking system. And they just accept it. No, just accept it. I mean, it's the banking system. When I did monetary economics, undergraduate and postgraduate, and you go through the textbooks, the banking system as is, like I'm describing, and we're going to go more into modern monetary economics later, is just accepted by the textbooks. There may be one or two little side notes, and oh, by the way, boys and girls, we used to have a gold standard. Or, by the way, Milton Friedman, Nobel Prize-winning economist, argued that there should be 100% reserve, fractional reserve banking. Don't know why. It must be off his rocker. I mean, just accept the system as it is. You know, it's great. And you might have a note on Friedrich Hayek, who believed that all the banks should be privatised, get rid of the central banks, and that banks should produce whatever currency or commodity currency, paper currency they see fit, and let the fittest survive in the marketplace. Right? But, generally, these people are called nutters because they believe reality is reality and that you can't cheat you shouldn't be cheating the public. But anyway, most of the textbooks just accept it. Just accept it. But if we are to become mature and wise custodians of the planet, as well as the economies they're in, and the beautiful life they're on, and all the markets, we need to drop this pretense that a violation of contract and reality is somehow justifiable. Whoa! Now, when the government gets sniffy about these things, they call in the police. What? The police? What's that got to do with banking? Well, everything if you're cheating the public all the time with some fraudulent reserves when you're pretending you've got more money in the coffers than you really do. Imagine those guys outside the car lot. 1,000 people, unseen buyers, turn up to get their cars. There's only 800 on the lot. The police are called in because there's a riot. It's the same when people want to take their money out of the bank. And here it is. The police are saying, no, you can't have it. Government says. Don't know why, but they just say. Just is, isn't it? Put up with it. Right. So, when the banking system is manipulating funds and pushing monetary substitutes onto the people over and above its reserves, we do get problems. Inflation runs on banks, and then the government comes rushing in. Yeah, with some police. Yeah, it gives us something to do. In comes the government. What a terrible thing, they say. It's terrible. Unethical bankers printed more claims than they had assets. How could they? Shouldn't be allowed. Right? Enough of that. Let's take over. And then there's some waffling politicians speak about it's in the public interest, blah, 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 national security, blah, 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 anti-terrorism, blah, 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 environmentalism, blah, 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 women's rights, blah, 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 blah. Whatever sells, basically. Whatever sells the intervention. And it's all a load of baloney. Seriously, it really is. It's the same sort of words repeated over and over again. That's why the government comes in and takes over. So, when the government takes over the minting of coins, in a previous lesson we looked at this, it has a rather strong temptation to debase the coinage. When it takes over the printing presses, well, what do you think it'll do? ... Yep, print it. We had German hyperinflation, 1922-23. We had Argentinian hyperinflation or Zimbabwean price inflation very recently. So, in the hands of the governments, the printing of monetary substitutes, either by the central bank, that is a nationalised bank or controlled bank, under the jurisdiction of government control, or permitted through a government-controlled banking system, they typically unleash a monetary debasement. Now, notice that I've put there government-controlled rather than market-controlled, because if it's market-controlled, the market stops cheats. You can't prosper if you cheat in the marketplace. Not for very long, anyway. People find out about you. Your reputation's sullied, right? You get traduced through the mud, literally. The effect is the same when the government mints debaser metallic coinage. There's monetary debasement when they start printing, right? More money is chasing fewer goods, and hence, dun dun dun, economists beware. Prices rise accordingly. Inflation. Resources are distributed away from the productive market. Yeah, why are they doing that then? Into the hands of the government for its uses. And more often than not in history, that has meant war. Really? Yeah. Check your history. A lot of economists avoid history. And I've even heard a Harvard economist, top Harvard economist and great textbook writer, very good writer and things, say, oh, we don't look at anything before 1990. He was a bit sniffy about it. We're trained not to look at anything before 1990. Well, imagine studying philosophy like that. Crikey. Or history itself. No, anything before 1990. I don't know why 1990. But it's rather shallow understanding of the world, right? Or do music and you don't do anything before 1990. God help us. Right. Now, there's no conspiracy theory needed here. Have fun if you want to do one. But you do need to be aware of the bank's usefulness to governments. This is The Economist, right? With access to a quick and ready means of expanding the money supply, governments have enjoyed recourse to spending beyond their means, particularly when it comes to waging war. Now, they do it for other reasons as well. They just spend beyond their means anyway, don't they, usually? If you're a bit naive about this, you're not really sure, just look up the national debt clocks and pick your country or any country around the world and see how much it owes. You might blanch. Right, so that's where paper money came in. It was invented as a monetary substitute. It's great for transaction purposes in the marketplace, fits into wallets very nicely, which help the wallet makers. Perfect. Cut transaction costs. Lovely. But unscrupulous bankers would then print more paper than they had resources available in the bank to redeem those paper notes for. The cheat! This caused bank runs, lots of issues, people panicking, rioting, etc. Then the government comes in, waffles a bit about public interest, national economy, blah, 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 takes over banks or controls the banks and permits them to print money either by themselves or through a central bank and produce more paper than they've got assets because the government can then borrow that money for a rather cheap rate. And again, if you're sort of thinking, no, it can't be true, surely, okay, just go through your Russian history, Soviet Union history even, Nazi history, Germany and the Weimar Republic history, Britain, 1970s, America several times, there was the continental dollar, there's the not worth a greenback a dollar song, Israel, Argentina, just have a look, look at hyperinflations, inflations, currency crises. Start joining the dots, right? The principles are behind it, though, and the principles are what I'm talking about at the moment with a few historical anecdotes as we go along. Right, thanks for listening, guys. There'll be more installments on monetary economics. We're slowly moving into modern monetary economics, but if you don't understand the background, if you don't understand the principles of where money comes from, the reason for those money substitutes and how the banks attempted to cheat, and when they do, how governments tend to take over those cheating mechanisms because it's very useful for them. If you don't understand that, you haven't got a clue what's happening in the economy, or any economy, world economy, and therefore currency crisis comes along, an inflation crisis comes along, a euro crisis, a Greek crisis, whatever. You'll be completely ignorant, even if you've got a PhD in economics, if you don't understand these principles. Got it? Lovely. By the way, don't forget to check us out, The Economic Circle, Apple Newsstand and Google Play. Cheers. Bye now.